Well, any reporting season matters, especially for small caps, because small caps you don't get much information from the market. Management don't issue as many announcements. There's not that many analysts, if any, covering them. And there are constant disclosure obligations, but there's a lot of grey area there. So this is a particularly important year, even for small caps, because they've had a huge run. Like they've climbed 25% in the past 6 months compared to the ASX 200, which has climbed sort of 6 or 7%. And there is a lot of volatility, so people will really be looking closely at the outlook statements, and to gauge just the rubber hitting the road. So this is the one chance where you get to see under the bonnet, you get to see or under the hood of the small caps financials. So you get to see whether those PEs are justified, and then in the outlook statements whether the momentum's going to continue. The industrial market PE is sort of in the mid to high teens, so 16 or 17 forecast PE, but the earnings expectations of industrials are like pretty low, like 2% or 3% in the low single digits. So I guess what people are looking for is more that the future, that there is going to be growth than past earnings, because the past earnings aren't forecast to be that to grow that much. In contrast, in resources, because of the rising commodity prices, you're likely to see earnings grow 30%, but there's a lot of volatility there, and I guess the main thing people are looking for is that, as I said before, the outlook statements. So what current trading conditions are and what management's expectations are for the year. There is a trend in terms of people going up the risk curve to get the same to get returns. So that sort of fits into buying small listed companies and getting more bang for your buck as far as risk appetite and potential goes. But there's also been a trend for takeovers, and we've seen in our universe, we've seen Certex and AWE taken over just at the in the last couple of takeover announcements in the last couple of weeks, and this continues a trend from 2017 where takeovers were an increasing part of our landscape. I mean, we've covered something like 120 companies. 6 of those companies have been taken over. So it's clear that in the corporate world, at the big end of the corporate world, with low interest rates, people are looking to generate growth through takeovers, and small caps are prime candidates. Well, I think that the trends that we've been talking about, people jumping into stocks at the smaller end, takeover activity, I think you've got to be looking to take profits. In small caps, we're seeing the volumes thin out. We're seeing a bid offer spreads widen. I mean, just the other day they had a big growth mandate come onto the markets, and that pushed a lot of stocks up, into double-digit figures off the back of no announcement. So clearly there is a lot of factors pushing the markets up in recent times, and it's always wise to take profits. And that's what we spend as much time looking at our companies to work out when to take profits, when to sell, as we do in looking at those companies in the first place. The first point to make in terms of selling is that you shouldn't wait till you have to sell. You should always be looking to cash to get liquidity from your investments at all times. The second point to make is in terms of how much to sell, in terms of taking profits versus selling. I think it just depends upon how big your holding is. If it's not a very big holding, then just get rid of it all. If you've got a slightly bigger holding, then and liquidity is an issue, which it is often for small cap stocks, you should take profits where you can and cash out to the point where you're taking your costs out and you're letting your profits run. I mean, it's very much a stock dependent, and that's why our team spends so much time looking at, the trading activity of individual stocks before we give our recommendations. We've had a lot of stocks that have been quiet achievers that have gone extremely well, like IMF, Alliance Aviation, other stocks like medical developments, but that have really risen quite markedly soon. So we're looking at those stocks again to determine whether it's time to cash out. Also, we've got a stock coming up tomorrow, which has just, this week, which is an initiation of coverage on a stock that's cheap, but it's a merger of two companies. So there's a lot of pressure on management to deliver some pretty big earnings estimates. So we've had a guy working on that for the past couple of weeks. So we're excited about that stock. Also, we've been looking at solar and wind energy, so the renewables energy space. So we've sort of run the ruler over that space. So then, as I said, we've got the reporting season coming up.